Good evening, friends. Namaste. I'm audible, Srija?
Yes, sir.
Yeah, you are audible, sir.
Okay. Welcome to the first session of R2R of CA Final, May 23 examination, financial reporting. Financial reporting after new scheme has been introduced has become reasonably easy compared to the old CA Final accounts. So with that attitude, okay, let us take up this subject straight away. I'll be speaking for about 45 minutes. The road to success comes through hard work, determination, and sacrifice. Difficult road lead to beautiful destinations. If you think CA is difficult, especially final, don't worry. Destination is beautiful. So this is the plan of action. It being the first examination, be more relaxed. Extremely important. First impression is the best impression. That's why you yourself have to prepare for the best impression to be created. That's why ensure that your physical, mental, every state of mind is extremely perfectly kept. New scheme, mainly the financial statement, in and out of the financial statements, which I'll also go through again today. INDS, integrated reporting and CSR. And maintaining good pace is very, very important, especially being the first paper. As I told in the conference booster session, next 3 days, daily 1 hour, you have to write at a very good pace. Write something which is commonly asked. Maybe integrated reporting theory you can ask, CSR theory you can write, or maybe some of the practical questions, theory related points. Keep on writing so that your pace is extremely taken care of. FR is a high scoring paper. Aim at 100. I'm very serious. You can get 100. We got one of our students reaching almost 97 in CA final FR. Okay, possible. 98, 100 in intermediate permutation is common, but 97 in FR is also extraordinary. Aim, read questions carefully, answer accordingly. For example, India's 103. I hope all of you know the India's number and title. When fair value is given, that means it's a full goodwill method. Working notes are extremely important. Even if your final answer doesn't match, you will still get 80 plus when the working notes are perfect. Go with the stepwise approach. So this is what I said. Final answer tallied, but no working notes, you may get 50. Final answer is not tallied, but still working note steps are perfect. You may end up with the 90. Core subject of our course, chartered accountant, hence enjoy this course. So our scheme, group CA final get division to balance sheet format, starts with the asset. The vertical format starts with the assets, then equity and liabilities. Use the term PPE, is a wrong word, but still, galti karna acha lagta hai, instead of fixed assets. Consider net worth for India's. India's turnover alla, profit alla, net worth. Then net worth greater than or equal to 500 crore. Greater than equal to 250 crore. Equal to is also taken care. Use the right terms. For example, India's 2, if you use the word NRV, for India's 41, you should use the word fair value. Do's and don'ts. I've already covered in the conference booster session. If any of our new friends listening, Srinija, over to you.
Do's in the last page or rough sheet, 5 to 10 minutes, write points for each question to be attempted. Working notes.
Hundreds of examinations, different exam. I don't think I never repeated any exam, obviously, by God's grace. So what I used to follow is I prepare very well. Examination 1:45 to 1:45 to 2 o'clock. Then 15 minutes I'll visualize which is the question I have to leave. First point you should think. It is not about which question you should select. First you should think out of the second to sixth question, which question mujhe nahi karna hai. That's how you should think. That question, strike off. Strike off means leave it. Then other questions you have to select which is the order in which I am supposed to write. So 1:45, your first job is which is the question, whether it's SFM, costing, income tax, whatever. Which is that question, I'm not going to do it. Other than set aside. Then amongst the other paper questions, because you will not find, especially at CFL, everything you will be knowing impossible. Okay. So which is that easiest question? Probably the sixth question will be easiest one. Start with that. Or third question easiest, start with that. So go in the order of easiest, next easy, least one. Okay. And last, if time permits, you can always write that extra question. And before you start writing, okay, at 2 o'clock when the answer sheet is given, in the last page, for whatever the questions you are going to write in the order, you scribble down some special points, notes, working note, whatever you think you may miss out later. Or theory paper, auditing if you are writing. So which are the special points of theory? You just make a note of. For example, professional ethics. You can make a schedule, first schedule, second schedule, apply, saka, pause, whatever I would have told. That all you can just write that, and last page you write, strike off. So that when you start writing at around 2:05 or 2:10, don't take more than 5 to 10 minutes. Even if by mistake, if you miss some point, you can refer the last page and you can get back. Yes, ma'am.
Working notes. Steps. Reference to correct Ind AS number if known. Reference to Companies Act if known. Write correct question number including sub questions. Attempt extra question compulsorily. If out of syllabus, then full marks.
Only when it is out of syllabus. I have seen n number of RTP mistakes. Okay, recent, earlier there used to be mistake. RTP, good number of mistakes are there. So probably if they lift that question, so at least write something at last 5 minutes. Whatever the question, let's say question 3A and 3B, some data of the question you write and come. If it's out of syllabus, only if you attempted, they will give full marks. If you're not attempted, they will not give the mark. Point number one. Point number two, when you're writing Ind AS, you write Ind AS with the title as per Ind AS 103 business. You should not say Ind AS as per 103. Ind AS 103 business combination. Maybe same thing if you're referring second time, third time, then you can say as per this standard for 103. But it is one time in the answer, number with the title aana chahiye. This is where some of you would have missed it earlier. As per Ind AS 103. As per Ind AS 103, inverted commas, business combination. Are you writing? Are you listening? Sorry. Yeah. Then don't writing Ind AS numbers when you are not sure. Don't relax within 3 hours. Unnecessary tension, don't carry. Yeah. You cannot go back.
You can't go back and change the beginning, but you can start where you are and change the ending by C.S. Lewis. Your mind is the strongest and the most powerful healer of your body. Be positive, be happy.
So come what may, exam is tough, easy, whatever. Okay. Just go and give your best shot. The most important one, amazing one for CA code, which this chart I have not changed. By Dr. APJ
Sri Dr. APJ Abdul Kalam. Success is vehicle which moves on wheel called hard work, but the journey is impossible without fuel called self-confidence. So,
my dear friends, CA final, in my opinion, 60 to 70% your preparation, 20 to 25% how you act, how you behave, how you present your answers in the examination hall. Maybe 5% other matter, which I'm not interested. So around 70% your hard work till date, 20 to 25% is your presentation, how confident you are. Yes, I am here to win the war. In that attitude, when you go, trust me, 100% you're going to win the war. With this, let us start. FR. Visible, reasonably, Nija, Ashok. Yeah. So financial statements, mistakes in the financial statement. So be the master of this financial statement. Rectification of the financial statements have been asked n number of times, at least 3 times in last 6 examination. Ind AS is a very important special topics. Financial statements are defined in section 2 within bracket 40, that is section 129. So financial statements include balance sheet. Here they use the word P&L account itself. Even though there we say statement, here it's called P&L account. For NPO, it's called I&A account. Cash flow statement. So C for India's balance sheet and explanatory notes. OPC, then small and dormant company need not prepare cash flow statement. Schedule 3 has got 3 divisions. Division 1 is non-India's companies, intermediate syllabus. Division 2 is CA final, our syllabus. And Division 3, NBFC glance. All the 3, part 1 is balance sheet and part 2 is statement of P&L. So we are going by 2 statement approach. Balance sheet with SOC and P&L account is a single statement approach. Even OCI is a part of the P&L itself. OCI is a part of P&L account. So Division 2, company's Indian Accounting Standard Rules of 2015 gives the balance sheet. Balance sheet is now of a so CFL syllabus is only corporate accounting, only company account. Company account format is always vertical format, no T-shaped format. So India assets on the top, equity and liabilities down. So you start with the assets, non-current and current. So first 3 are tangible. PPE, capital work in progress, investment property, India is 40, that is land, building or both. Next 3 are intangible assets. First one is the most important, goodwill, non-depreciable. Then other intangible assets like KPTCL FO, then which is under development. Then BFDO, boyfriend, Dura Ododanta. Okay. Biological assets, then financial assets, only ITL, deferred taxes, other non-current assets. In and out of the financial statements are required because every Ind AS when you write, you have to connect it to the balance sheet and P&L. Prati Ind AS Barevaga, you connect it so that your answer flow will be better. And current assets are IFCO, IFCO, inventory, always current. Then financial assets, current tax asset and other assets. So financial assets will ITL and CBO. ITL is investments, trade receivable, and what you call the loans. It can be non-current also, current also. Then CBO is always current. Special point to be noted, trade receivable under Ind AS can be current or non-current, whereas inventory is always current. Inventory will never be non-current. So then equity and liabilities down. First equity share capital, or ordinary share capital, then other equity. There's nothing but SOCI. You have to give a separate statement. Then liabilities non-current and current. FPDO, same point, they have just altered. FOPC and FPDO andre financial liabilities, then provisions. Deferred tax liabilities always non-current. So then other non-current liabilities. Same items here also. Financial liabilities, financial liabilities. Then provisions, provisions. Other non-current, other current. Then deferred tax is always non-current. Current tax is always current. I think it goes by the name. So they just change the order. Then statement of P&L, almost like division 1 itself. So statement of P&L with the note number, current year, previous year. So first 4 items. Rote, revenue from operation, other income, total income, expenses. Expenses again, trading P&L account, what you learned in your PUC BCom. Okay. Start with the material related. First 3 are inventory related. Cost of material consumed, purchase of stock in trade. So raw material inventory should be part of the first line item. Opening stock of raw material plus purchase minus closing stock. Whereas if any other inventory, that is work in progress, finished goods and stock in trade, opening minus closing. Positive means you write positive. Opening minus closing. Negative means you write negative. Then comes in trading account, purchase admin is to have salaries or the wages, employee benefit expenses. So then EFDO, employee benefit expenses, financial cost, depreciation and amortization, other expenses. Then we have PBET. There is no extraordinary item concept under Ind AS. Only in AS we have profit before exceptional item and tax. Keep removing. So tax expense always is current tax plus or minus a deferred tax. Then if there are discontinuing operations, you consider the profit. Then comes your other comprehensive income, OCI. That's why P&L account is always a single statement approach. Pace is okay, speed is okay. I'm at a good pace because I have to cover the entire syllabus in 1 hour, 45 minutes. Okay, all of you comfortable? Pandaya Ashok? All of you listening? Are you able to hear me?
Yes, sir.
Yeah.
Okay. So, OCI, items that will not be classified. Items classified. Yes, sir. Then total comprehensive income. So this one and this one you add. Then earning per share, it can be basic earning or diluted EPS. Very important for continuing operations separately, for discontinued operation, discontinuing Allah. In India, we use the word discontinued operation. India is 105. And here for discontinued and continuing operation. So basically 3 categories under basic and diluted EPS. Make important mark, special one. So in India, no extraordinary item, show OCI separately and EPS I showed you right now. Here there is no concept called minority interest. It's called non-controlling interest in division 2. Okay. So for consolidation as well as normal, balance sheet format is same. P&L format is same. In the balance sheet, you should have a separate line item called non-controlling interest after equity. Next, application of Ind AS. So phase 1, phase 2, and phase 3. Phase 3 is not yet implemented. If your net worth is greater than or equal to 500 crore, it is from 1617. Whereas if your net worth is less than 500 crores, if you're listed company, it's phase 2. And net worth is more than or equal to 250 crores. All of them will be India's companies from 1780. Okay. Phase 3 is not yet notified. And wherever you talk about company, you should always include the JAS in that line chart. Joint venture, associate, subsidiary, or holding. If parent company is a phase 1, all other companies are going to be phase 1 in the process. India's special points. 2 important guiding principles. Wherever you go, suppose you have come across some theory, we don't know what to use. Trust me, you can write fair value and substance over form. India's is guided by fair value and substance over form. Every India's question, you must make a reference to schedule number 3. Okay, division 1, division 2. And every India's, wherever there is analytical theory question, go for RMPD, recognition, measurement, presentation, and disclosure. India's 16 and India's 38. PP and intangible asset, measured normally at cost, initially always at cost. Subsequently, if you want, you can go for fair value model. You have to go once in 3 to 5 years for each class of assets. India's 40, on the contrary, it is always valued at cost. fair value is merely disclosed within the brackets. No question of revaluation of investment property. LBB cannot be revalued, even though there is a depreciation for investment property as well as Ind AS 16. Am I fast? Are you comfortable? You're able to catch? Okay, great. Next, Ind AS 2, inventory. Inventory is valued at cost or NRV, whichever is less. Then Ind AS 41, agriculture. This is a beautiful chart because all the related topics are covered here. Biological assets only at fair value less the cost to sell. What is the fair value less cost to sell has to be considered. Then we have Ind AS 105. Non-current asset held for sale and discontinued operation. So non-current assets are like inventory. So carrying amount or fair value less cost of disposal, whichever is less. This is the valuation principle you are supposed to follow. How to answer Ind AS questions? Theoretical questions are very rare. Some analytical questions will be there. Make a reference to concern Ind AS with the title. Write the definition if you know as it. For example, fair value measurement. What is fair value? If you know the definition as it is, those words you use. Okay. So OMM, orderly transaction between market participant on a measurement date. Ade use madre, you'll get the marks. That's it. Okay. Give an example for fair value. What is the accounting treatment? Ultimately connected to Schedule 3. Analytical theory, almost same. And mention about how is it treated. Problems, one line in almost 5 marker question, not 16 marker, 15 marker. 5 marker question, you always write 1 line, 2 line about as per this Ind AS, number so and so, title so and so. This is a treatment. Compulsorily write 1 or 2 line theory for every analytical 5 mark to 10 mark question. Is it clear? And disclosure if required. Now let us recall. I hope all of you are aware. Ind AS, okay. Ind AS has got 2 RMRs. So Ind AS numbers 100 series are IFRS. So IFRS and Ind AS, you know the concept, I hope. 2001, they wanted to completely revamp, and that's why IASC has become IASB. They wanted to promulgate IFRS, but till date only Ind AS, IFRS 17, even though 16 is only applicable for your examination, are what you call made applicable. So whatever IFRS number 1, we call it as 101. 2 is 102. Other AS, which are continued as IAS, will be called Ind AS with the same number. For example, IAS 2 is equal to Ind AS 2. Fine. So we have IFRS, which we call it as Ind AS 101. First time adoption of Ind AS. So the important point is, it's an analytical theory, they may ask a question. Make a reference. And this one as a reference to almost all other standard also. How actually Ind AS 34 makes a reference. How Ind AS 33 makes a reference. All the, suppose when you're applying for the first time, any changes, you have to bring it in the opening balance of the reserves and surplus. Other equity, you have to bring, because all these are belonging to the previous years. Previous year equivalent balances are with the reserves and surplus. Share-based payment, Ind AS 102, either equity settlement or cash settlement. Also look into the option accounting, connect with the Ind AS 119 also. Ind AS 103, business combination, okay. Acquisition method is suggested, only method suggested in IFRS, but Ind AS has got a carve out deviation. We also say for common control transaction, you can go pooling of interest method of accounting. Under acquisition method, positive is goodwill, negative is capital reserve. Under pooling of interest, positive or negative is always capital reserve. I repeat, under pooling of interest method, especially common Infosys and Infosys BPO, 100% subsidies if they're getting merged. So always positive or negative is the capital reserve. Therefore, under Ind AS, very openly, reserves can also be negatives. Within the bracket, we are supposed to write. Practical questions on amalgamation. Reverse merger question, you go through demerger. Okay. You have to go through that. Reverse merger is AX, BX problem. If you remember, accounting acquirer will become legal acquiree. So reverse question, one of the beautiful question and repetitive question. I'll just show you some questions later. 104 is out of syllabus. 106 is not there in the syllabus. 105, non-current asset held for sale, treated like inventory. I have shown the evaluation principle there. Okay. And discontinued operations. Whatever is discontinued, you have to make a disclosure. 107, 109 and Ind AS 32 are financial instrument related. This is disclosure. 108, extremely important. Almost last 4 examples, 3 times they have asked. How do you classify the segments? So reportable segment, 10% of the revenue, total revenue, internal, external, 10% of the total of the profit and loss in absolute number, 10% of the assets excluding 50% income tax asset. And this 10% criteria should cover cumulatively 75% criteria, and management choice also can be there. CODM, okay, Chief Operating Decision Maker. Okay, it is not a function, it is the way in which you segregate the segments. Extremely important, 10% criteria mele question barutte. Columnar way you can present it. 109, one of the most important standards. Okay, how you classify. Okay, so in the regular CAPS material, there's a table where we have said what is the financial instrument, what is not a financial instrument. Okay, go through that table again and again. How do you segregate a compound instrument? If there is debt and equity combined, how much is the debt component? What are the interest, etc., which you are paying over a product and discounted to today's cash flow? So that will be the debt component. Balance will be called equity component. How do you segregate? Extremely important. India's 110 and 103 are interconnected. 103 is about business combination. So many things like goodwill, etc., are interconnected. Consolidation, there are steps which I'll discuss little later. Almost a compulsory question for 20 marks. So maybe they might, normally consolidation will be for 20 marks and amalgamation 103, etc., will be for 10 marks. Whereas they might ask 20 marks for 103 and 10 marks for consolidation. That can also be done. But 5 out of 6 times consolidation is for 20 marks. Okay, right. Joint arrangements, it can be joint asset, joint operation. Here so in 110 we follow total consolidation approach, line by line, Babka Mala Bolke, everything we add. Whereas under 111 we add proportional consolidation approach we follow. Next, 112 is about a disclosure requirement. 113 is a fair value measurement. So 113 defines what is fair value. A transaction between a willing buyer and a willing seller in an OMM, orderly transaction on a between market participants in as a measurement date. So how do you get into the fair value? Okay, market value based, income based, or cost based. So how do you consider the input for this? Level 1, level 2, and level 3. Level 1 are like identical scenario. Level 2 are like a similar scenario. Level 3 are unobservable. For example, when you talk about Creta, okay, and maybe Brisa, if you compare, they may be similar in nature. They are not identical. Whereas Creta red one, Creta white one, they are identical in nature. Whereas Hyundai Creta with the Maruti Gypsy, they are totally different concepts. You cannot compare. 114 is out of syllabus. 115 is extremely important. Revenue with contracts. So earlier we used to have revenue recognition and construction contract separately. Now construction contract is also part of it. Construction is always based on POCM, percentage of completion method. Whereas every other revenue, 5 principles have to be satisfied. COPER. Okay. So there should be a contract, performance obligation, price, allocation, and recognize the revenue. Then also special transactions, boot, bolt, etc. Build, own, operate, transfer. Almost regularly they are asking that question. Build, own, lease, and transfer. Extremely important. Glance it again. India is 116, which is applicable from last 2 examinations. Okay. Lesser accounting alli matra. I am the lesser. Srinija is the lessee. In my book, there can be operating and finance lease. Operating lease example is Shamiana. Maybe 2-3 days you put the Shamiana, you take back. Lesser continues to be the owner forever. Whereas finance lease example is you take a car from Sundara Motors. So lessee becomes a beneficial owner, not a legal owner. Whereas in the case of lesser, there is a concept called operating and finance lease. In the books of lessee, there is no concept of operating and finance lease segregation. It is always ROUA, right of use asset, which is always valued at a present value of the minimum lease payment. Also glance through lease modification. So your study material question as it is, they will be lifting it. India's one. So these are the India's based on IFRS. Then India's one based on IAS series. Presentation of the financial statement. Schedule 3. So very, very important. So GAC principle also you go through. And you can make a reference to almost all of the standards for India's one. Inventory valuation, cost or NRV, whichever less, just like AS2. Okay. Overhead valuation, you take one extra point there. Variable overheads are always based on actual production. Fixed overheads, if the output, important point, fixed overhead, if your actual output is more than the budgeted, that also should be based on actual output. Otherwise, fixed overheads are absorbed based on budgeted production. I repeat, variable overheads are always based on actual output because it varies. Fixed overhead are normally based on budgeted production. But if the actual output is more than the normal capacity, budgeted capacity, then fixed overhead should be absorbed based on actual output. Second point is, raw material is normally valued at cost. However, NRV of the raw metal as well as finished goods is lesser, then raw metal also should be brought down to NRV. India 7, again a 5-marker question they can ask. Cash flows are classified into existing balance sheet and P&L, classified into operating, investing and financing. Anything related to the PPE, intangible assets, long-term loans and advances, and revenue from it, interest dividend is investing. Anything related to the liability side, share capital, premium, borrowings, interest paid, dividend paid is financing. Everything else is operating. There can be an interesting question in connection with India's 21. How do you connect cash flows, okay, operating cash flows with the exchange fluctuation? Go through it. Okay, extremely important. Then India's 8, accounting policies, accounting estimates and errors. Accounting policy, the principle what you follow. Okay, policy change is always retrospective. Accounting estimate change is always prospective. But as far as PP is concerned, intangible asset is concerned, any change is prospective only. Change in method from SLM to WDV, cost model to fair value model, maybe a cost model to fair value model is a change in accounting policy, but still you have to do retrospective effect because specific standard overrules the general standards. Next, India's 10, events after the reporting date, 2 RMRs. 31st March is a financial statement. 30th June, it will be approved by Board of Directors of the governing body. In between, whatever happens, 2 RMRs. Adjusting means the events existing, conditions existing on 31st March, but made known later. For example, your client was insolvent, but you got to know on 10th April. Pass an entry on 31st March, go back. Whereas absolutely fresh event, no accounting, you may disclose the same in management report. Income taxes, creation of deferred tax asset and deferred tax liability. Okay, practical questions on this will be asked. The differences, what arises. India's 12 does not make a difference between a permanent difference and temporary differences. Permanent differences are not discussed. It talks only about temporary differences. Temporary differences can be either deductible or taxable. So you save now, pay later. You save now, pay later. It is a deferred tax liability. You pay now, save later. It is a deferred tax asset. Simple principle. Save now, pay later. For example, some of the expenses, okay, are fully allowed in income tax. In accounts, you would have amortized. In accounts, you would have amortized. 3212A, for example, additional depreciation, what you get in income tax, you save now, pay later in the deferred tax liability. Ulta, 43B cases. You have to pay now because you are not remitted that within the due date. So that's deferred tax asset. Deferred tax asset. Fine. And deferred tax asset and deferred liability always non-current. Normally show separately. Netting off is only when those two conditions are satisfied. India 16, tangible, which are valued at cost model. However, once in 3 to 5 years for each class of assets. Factory building is separate, office building is separate. You need to do the, what you call the fair valuation. Any upward valuation, take it to revaluation surplus. Downward valuation, debit to P&L. Upward, downward, or downward, upward. If it is upward, first upward agide, downward agide, whatever the revaluation surplus balance lying there, after charging the normal depreciation, has to be debited. Balance amount should go to the P&L account. Depreciation, normal methods of depreciation, SLM, WDV, units of production method, suggested by India 16. Our other methods also can be followed. Disclose what you have followed. And component method of depreciation, especially for aircraft. Engine may be for 20 years, body may be for 10 years. How do you depreciate? India's 19 has got 4 principles. Short-term benefits are accounted as and when it happens. Long-term benefits and post-retirement benefits, either you can go by defined contribution scheme or you can go by defined benefit scheme. Provident fund is a defined contribution scheme. Employer pays 12%, forgets it. Defined benefit scheme is like a gratuity. You need to make the payment only if the employee sticks to your company for more than 5 years. That's why you need to take the help of a actuarial valuation. And there are some 7-step approach what we discussed. The difference, whatever the gain, actual gain, etc. How do you account also go through a compulsory question along with 1 or 2. India's 20, ditto India's 12. They have brought some change, but again they brought back to India's 12. One major point of India's 20 is everything is income approach. There is no concept called capital approach here. Okay, everything. So revenue grant, take it to P&L. Capital grant, everything overpaid. There is nothing like a capital reserve. Okay, no concept of promoter's contribution. Refund of government grant is an extraordinary item in AS, but there is no concept of extraordinary item in India's. So it is a normal ordinary item only. Then if the loans are given at a concessional interest or interest free, That also should be recognized as the government grants as per India's 20. Special point, go through 1 or 2 questions just before examination. India's 41 versus India's 20. Some of them will come under biological asset. Related to the biological asset, when the subsidy is given, it comes under India's 41 only. Whereas all other things, so what you should do is it related to the agricultural activity? Anything related to agricultural activity should come under India's 41. Every other grant will come under India's 20. India's 21. So compared to AS, we have got, there it is only 2 currencies. Here we have got 3 currencies. Functional currency, primary and secondary economic conditions, where the entity functions, basically based on your sales and other activities. Presentation currency is the currency in which your financial statements are presented. Normally they are same, but if it is different, disclose. Any currency which is other than functional currency is called a foreign currency. So translation, etc. take care. Dollar to rupees, you have to multiply. Rupees to dollar, you have to divide. Indian rupee and Japan, okay, Japan yen. Japan yen is a weaker currency compared to Indian rupee. It is a reverse function compared to American dollar. Take care of that mathematics. India's 23, borrowing cost, ditto India's 16, sorry, AS 16. Any borrowing cost, that is IFE, interest, then finance charges and exchange differences. One special point of exchange difference, any exchange difference relate in connection with the Indian currency, you have to compare and do it. Any borrowing cost till the date asset is ready to use has to be capitalized. Beyond that, it has to be charged to P&L. If it is specific borrowing, entire interest has to be capitalized. If it is a generic borrowing, then you have to do the weighted average cost of capital and do the calculation accordingly. Right. Then India's 24, related party disclosure. There can be 2 kinds of related party, either the control based or significant influence. If it is a control based, holding and subsidiary, disclosure is must, whether or not there is a transaction. Husband and wife, whether husband is in America for next 10 years, he continues to be husband only, you have to disclose that he is my husband. Whereas the significant influence is girlfriend. Every 6 months semester scheme change aagta rehta hai. Disclose only if she is a girlfriend or boyfriend, as the case may be. So disclosure is required only if there is a related party transaction. Go through some analytical questions, extremely important. Theory question. India's 27, SFS. When there is a parent subsidiary concept, financial statements are called SFS. When there is no holding subsidiary, they are called IFS, individual financial statements. Schedule 3, just you have to follow. Next, investment in associates, India's 28, equity method. Equity method is nothing but a partner's capital. Okay, ditto. November 22 also they are passed. How do we prepare? Investment account, partner's capital account, initial capital, add share of profit, salary, etc. Initial capital, any share of profit in any form, let's say dividend, that is nothing but the investment. 29 is out of syllabus. 32 is disclosure of financial instrument. 33, EPS, connected to schedule 3, division to part 2. Last 3 parts, basic and diluted for continuing, discontinued, the word is should be discontinued, and total, you should show separately. And also each of the problem we go through, basic EPS kaise kar raha hai, diluted EPS. Diluted EPS is when, if you're talking about the profits being shared with the prospective shareholders, prospective investors. For example, I was eating 4 idlis, so I'm the person to enjoy 4. If Srinija enters without anything in her hand, then it will become 4/2. Whereas Srinija enters with the 2 idlis, 4 plus 2, 6 divided by 2, it will become 3. It's still diluted. If Srinija enters with 6 idlis, 4 plus 6 is 10, divided by 2, it will become 5. Earlier I was supposed to eat 4. Now I made to eat 5. That means it will become anti-dilutive. Anti-dilution should be excluded. Dilution mainly takes place because of the ESOP, highly dilutive, because it only increases the denominator, no increase in the numerator. Then conversion of debentures into shares, it increases the numerator by net of tax interest, whereas conversion of preference shares into equity shares add entire preference dividend. If it's a foreign country, there may be a concept called DDT. In India, there is no DDT from 1st April 2020. Fair. Next. Where are we? Fine. So India is 34. Okay. IFR. So whatever you are preparing for the end, if you prepare for a shorter period, it can be for 3 months, 4 months, etc. Interim financial reporting is different from interim financial results of SEBI. Interim financial results is different. IFR in format may look similar. So exact financial statement, either you can go with complete or condensed. India suggests you to go with the condensed one, and also discrete view and integral view. Integral view is each period, if you consider the part and parcel of the entire year, that is called integral view. Discrete view is each period is independent. Okay, discrete view. So for the income tax, you should always go for the entire year and go for weighted average. Normally, income tax computation with connection with the India 34 is asked. India is 36. Impairment of assets, especially mainly who are from Bangalore people. I am not a Bangalorean as of now. I don't know whether it's anymore. So impairment of an asset. When you eat in hotel like Nandini, Nagarjuna, etc., Kara, so body parts get impaired. CA. When carrying amount is greater than recoverable amount. What is carrying amount? Your original cost minus accumulated depreciation bar amortization minus accumulated earlier impairment if any. What if it has happened 3 years back? So there's nothing but book value. Recoverable amount is net selling price or value in use, whichever is higher. Very important. Assuming book value of the asset is 100 lakh, whereas recoverable amount is what? Net selling price. Today, if I can sell it at 102 lakh, net selling price, whereas value in use, future cash flows, if I convert into today's value, it's 95. Now, you have to go in this order only. Carrying amount, you find out. First, you have to check up what is net selling price, which is easy for you to do it. What can be the market value today? Fair value less cost to sell. Whereas, how much will be the cash inflows for the next 10 years by manufacturing goods are difficult. Whereas if this itself is higher than 100, you don't have to go for impairment test because there is no impairment. 102 or 95, whichever is higher. So 102 is higher, there is no impairment. So when CA is greater than recoverable amount, then impairment loss is CA minus RA debited to P&L. There is no concept of a reversal of impairment as far as goodwill is concerned. Whenever there is a impairment, first you have to write off goodwill. Okay. Individual asset. If individual asset not possible, you have to get into CGU. Highest number of questions based on CGU they ask. Cash generating unit is the smallest possible identifiable group of assets where you can identify the assets and identify the what you call impairment. If there is a goodwill in that CGU, first you write off. Once you written off the goodwill cannot be reversed. There are other assets like subsequent upward revaluation, you can always reverse it. But ensure that had there been no impairment earlier, what would have been the book value? To that extent only you can bring it back. You cannot bring it upper than that. A simple example, assuming 100 lakh is the cost of the asset. First you did an impairment and 40 lakh was written off, brought down to 60 lakh. Next year itself, if you want to bring that to 105 is not possible. It should be lesser than 100 lakh. So had it been 100 lakh, minus 10 lakh depreciation would have charged. Maximum you can bring it up to only 90 lakh, even though the recoverable amount today is 105 lakh. I got a point. Regular class, I stressed on this point and we have done a problem on that. Look into it. India is 37. What is a provision? Provision is a liability. First word. Provision is a liability. First. What is liability? What is OA? It is an obligation, present obligation involving outflow of economic resources, embodying economic resources. If it is a present obligation satisfying these three conditions, it is a provision. It is a present obligation, but it doesn't satisfy other two conditions. It is a contingent liability. Whereas if it is a plausible obligation, it is a contingent liability. Present obligation, plausible obligation, difference ಇದೆ. Present obligation involving outflow of economic resource, which can be measured. CMR, in the words, outflow of economic resource, embodying economic benefits. CMR, cost can be measured reliably. Almost whether it is asset recognition or liability recognition. So it is a contingent liability. If it is a present obligation, it may be a liability, provision. Whereas if it is a plausible obligation, it is always a contingent liability. If it is a plausible asset, it is a contingent asset. Contingent liability we disclose. Contingent asset based on the percentage criteria I would have shown some. You can go through it. India is 38. Intangible asset. Ditto like India is 16. All the principle. That is depreciation. Here it is amortization. That is identifiable. Here it is identifiable non-monetary asset. So non-monetary without physical substance. One special word is without physical substance. And research cost is always charged to P&L. Development cost will be capitalized if traffic, TRAFIC, 6 cumulative conditions are satisfied. Once research cost has been written off to P&L, development cost has been written off to P&L, you cannot reverse it. India's 38 only, if the expected life of the asset for intangible assets, okay, before I forget. Goodwill, it is always an impairment test. Goodwill cannot be amortized. Goodwill cannot be amortized. Special point though. Goodwill cannot be amortized. Goodwill is always impairment test. All other assets, patent, cost divided by 10 years. Do it. If the life is unascertainable, then you have to go for impairment test. So impairment test, one is goodwill and any other intangible asset where life is unascertainable in India's. Unlike AS 26, where they said take it 10 years. India's 10 years concept illa. India's 40, investment property. It is land, building or both. Shetty sir, chartered accountant, purchases building for his office. India 16. Shetty sir, real estate business. India 2. Shetty sir, chartered accountant, investment, land, building or both for renting or purpose or the capital creation. So then it will be investment property, always measured at cost, no revaluation. However, within the bracket, you must disclose the fair value. Agriculture, along with the government grant, I said connect it. It is always valued at fair value less cost to sell. India's 110, I intentionally skipped there. Normally, first, second question. Consolidation, 6 plus 2 steps. First step, determination of shareholding pattern. Look at the holding company balance sheet. There can be chain holding also. Subsidiary company financials. Subsidiary company share, equity share capital deko. Holding company investment deko. What is the connection with the number or face value? Don't go with the cost. Infosys 5 rupees the face value. Cost may be 2000 plus. It is a ridiculous comparison. Number comparison, face value comparison. Determine. Step 1, let's say 60-40. Step 2, analysis of the other equity of the subsidiary company, everything of subsidiary company. So pre-acquisition, post-acquisition. So next step 2, a bonus shares may be there. Step 2B, fair value change, revaluation. So assets, liability, any increase or decrease. Asset increase is the income, liability increase is a loss. You are right within the bracket. And when there is an asset increase, also take care of the depreciation on the same calculation portion. Very, very important. First and second question of the regular caps material. Next, step number 3, computation of goodwill. It depends on India's 103. Full goodwill method or partial goodwill method. When NCA valuation, either fair value or proportionate of net asset is given, you must go by full goodwill method. Whereas if the NCA valuation is not given, you have to go by partial goodwill method. Step number 4 depends on step 3. If you have followed full goodwill method, whatever NCA you have added here, okay, you have to take the same because goodwill valuation is on the date of acquisition, whereas NCA valuation is date of reporting. So, assuming 30th September 2022, the date of acquisition took place. On that day, what is the goodwill? What is the goodwill you have to consider? Goodwill is on 30th September. So, NCA valuation also on that day. But NCA valuation for balance sheet purpose is on 31st March. So, from here to here is a post-acquisition profit. Inonsala heltini. Computation of goodwill depends on partial goodwill or full goodwill method. Whereas non-controlling interest, if you have followed full goodwill method, what NCA you have taken on 30th September plus post-acquisition profit from 30th September to 31st March has to be considered. Are you clear? Fine. Step number 5, intercompany owings or mutual indebtedness, the BRBP, debtors, creditors, etc. You have to eliminate. Unrealized profit. Holding company has sold to subsidiary company downstream. You have to do it in step number 6. Remove from the P&L, remove from the stock or any other asset. If it is upstream approach, what is the upstream approach? Subsidiary company selling to the holding company. Subsidiary company selling to the holding company. You have to bring it to step number 2. Whatever is that unrealized profit from the post-acquisition profit, you have to minus automatically in the step 2 itself taken care. In step 2, step 2, step 2A, step 2B, you have to always make an analysis. How much is the holding company share and how much is the NCI based on step 1 and all NCI and the partial goodwill approach. Just add together, that will become the NCA to be shown separately. Next, 2 important theory, 100% one of them will be asked. Integrated reporting is how the company thinks and does the business, how you present under 6 different capitals. I'll show you little down, okay? Intellectual capital, financial capital, etc. 6 capitals, you have to by heart that. And content of IR, integrated reporting, okay? There are 8 important special. What is the strategy? What is the policy formulation? You need to discuss all those things. There are 8 points. Go through it. SEBI has voluntarily suggested top 500 companies to follow integrated reporting from 1718. CSR, corporate law, section 135. Every company, including a foreign company, which satisfy any one of the following conditions. So first, go with the turnover. So a balance sheet, if you're going, obviously, we can go in the order. Balance sheet net worth more than 500 crore. Turnover in the P&L account credit side, if you visualize the T-shape, 1000 crore. Net profit 5 crores or more. You'll be careful, equal to symbol taken care. Be careful. 500 or more, 1000 or more. Common sense is turnover is the highest figure, 1000 crore. Turnover leads to profit, maybe 5 crores. Accumulated profit will give to net worth 500 crores. So turnover should be the highest figure, 1000 crores. 1000 crores only, profit can be only 5 crores. But 5 crores, etc., accumulate over a period of time, that will become net worth. That's why it's 500 crores. So it need to every company which ceases to fulfill the above condition for 3 consecutive years, then only they may have to stop. Otherwise, they have to have a CSR committee and they have to transfer at least 2% of the average net profit of the last 3 years compulsorily. The activities which are not considered as CSR, if you do the activity outside India, political party conviction, or normal business activity or spending is not. Implementing CSR, including cash foundation, we are doing it where Section 8 companies, registered trust, registered society. Income tax, the explanation 2 has been added. 37(1) disallows CSR expenditure. However, under 35 CCC, 35 CCB, etc., you can claim it as a deduction. So, November 22 question paper, I not intentionally put it. I observed it because I put the November 22 to suggest answer. So, May 23 students to keep May 22 as a base. Okay. So, normally May to May, November to November connection. So, these are the kind of questions which are asked. First question 110 for 15 to 20 marks. Then one question on analytical theory, India's 1. Then here they asked CSR. November 22 they asked integrated reporting. Then 115 definite question for around 10 to 20 marks. Then 19, 23, 21, 109. Some theoretical framework they have asked. Integrated reporting also they asked. Okay. Sometimes both are asked. Then India's 20 is a common question. 105. Okay, is a very important question. Then 33, 113, 109, 41. So sixth question. Okay. So probably 5 markali. E questions I told you to write the India's title and one line about what is that question, right? And then go ahead. December 21 also similar. We'll be sharing it. So this is a marks pattern, FR, SFM, etc. we are given. FR only theory, okay, you can just see it is shrinking around 10 to maximum 20 marks of late. 36 marks is a very rare phenomena. So 10 marks theory you can think, maximum 20 marks, not more than that they're asking, right? So this I've already given probably I think in the examination analysis today. So one compulsory question and one choice will be provided. 1 plus 4 out of the 5 and important areas. One sure short question on 110 business combination, corporate restructuring, CSR integrated reporting. Anyone normally asked, very rarely both they ask. Schedule 3, division 2, extremely important. Go through some RTP questions also. Rectification, there are some common mistake. Provision for foreseeable loss is shown on reserves and surplus. How to rectify? In the initial class, I would have done those problems also in every batch of CA final. Important ES problems. These are the areas where they can concentrate. India's 12, India's 16, India's 33, India's 36, etc. Then theory questions can be from India's 1, 20, 24, 37, 40, 41, CSR and IR. And one important question recently, very, very important, make a note of it. Valuation of shares in the regular class I have done. So based on discounted cash flows, EBITDA they will be giving you. You need to convert that into discount cash flows and divided by number of shares. So important orders, order in the order of importance, maybe CFS around 15 to 20 marks, 110, 103 around 10 to 15 marks. Okay, maybe they can ask NCI computation, cost of control computation, etc. Then special AS, okay, any of these 16, 23, 36, 12, 21, etc. Then analytical theory from India, so the CSR and integrated reporting. Financial instrument around 15 to 25. Sometimes 30, 40 marks also they can ask. Be careful. Financial instrument, don't take a chance. Then share-based payment around 10 marks. Schedule 3 can be for around 10 marks. Valuation of shares, important area, this one. Consecutively, they are asking for around 5 marks. These topics are removed from the syllabus. Earlier to there. ICS stands are not there. Guidance note, human resource accounting, carbon credit, etc. not there. So go through the RTP, glance it once, because one question, last 2 RTP also, if you do it, is great. Problems on CFS, practice at least 1 or 2 questions to get the flow. Interlink, because in the next 2-3 days we have, interlink the standards. So when you talk about India's 19 with the 102, 16 with the India's 10, India's 21 with the India's 7, or the 21 with India's 41, sorry. Do CFS at the end, do it, don't miss it, because it may be time consuming, because looking at the format itself, so you'll start shaking, that's the problem. Go through RTP theory, don't neglect small topics like CSR fair value, Work out study material problem if you can now, whatever. Practice small problems given in the study material on special topics. Just for fun. Wife called mom. He fought with me again. I am coming to you. Mom says, no dear, he must pay for his mistake. I am coming to stay with you on the mother-in-law. November 22 suggested answer, which I'm sure all of you have seen it. Just to tell you, this is the format. One question is compulsory, 4 out of 5. Working note should be part of it. First question is on Indias. So straight question for 15 marks. Okay. Reasonably easy question. Almost similar question would have solved. Next question is on Indias 113. One of the easiest question again. But look at the Indias 110 question running pages. You don't have to follow the same format. Follow the format I had told you, 6+2. But look at the number of pages it is running. Okay, again, here they have also given alternatively. So this you don't have to follow. Don't get tense by looking at it once more. Alternative approach they would have followed. You follow only one approach. Alternative approach is not there. Then this one I was telling you. Valuation of shares. India's 113 cash flows, terminal value, ನಿಮ್ಮ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ನಾನು ಮಾಡಿದೀನಿ ಪ್ರಾಬ್ಲಮ್ ಅನ್ನು. ಡಿಸ್ಕೌಂಟ್ ರೇಟ್ ಇದೇ ತರ ಕ್ವಶನ್ಸ್ ದೇ ವಾಸ್ಟ್ ಆಲ್ರೆಡಿ ಥ್ರೈಸ್. Cash flows minus debt whatever you have, add cash and cash equivalent. Anybody remember similar problem being done in the class? Ditto question. Okay.
Same ditto, sir.
Equity value divided by number of shares. Be careful with the format. So then less debt, add cash and cash equivalent. Then equity valuation divided by number of shares. This question I was trying to say. Valuation 113. Then question number 2, okay, is about again India's 103 ನಲ್ಲಿ consideration computation. Okay, present consideration, then contingent consideration, future consideration. You are aware of it. Contingent consideration should be recognized at fair value. Future consideration should be recognized at a present value. Okay, ಅದರ ಬಗ್ಗೆ problems ತುಂಬಾ ಸರಿ ಕೇಳವರೆ. Okay, look into it. Okay, then India's 115 same question. They have changed the name. Ludhiana, Chandigarh. ನಿಮ್ಮ ಕ್ಲಾಸ್ ನಿಮ್ಮ ಸ್ಟಡಿ ಮೆಟೀರಿಯಲ್ ಅಲ್ಲಿ ಅಥವಾ ಕ್ಯಾಪ್ಸ್ ಮೆಟೀರಿಯಲ್ ವಿ ಹ್ಯಾವ್ ಡನ್ ಎ ಸಿಮಿಲರ್ ಪ್ರಾಬ್ಲಮ್. ಇಲ್ಲಿ ಬ್ಯಾಂಗ್ಳೂರ್ ಚಿನ್ನ ಹೇಳವ್ರೆ, ಅಲ್ಲಿ ಬೇರೆ ಯಾವ್ದು ಹೈವೇ ಜಬಲ್ಪುರ್ ಎಕ್ಸ್ಪ್ರೆಸ್ ಏನೋ ಇದ್ದಂಗೆ ಇತ್ತು ಕ್ಲಾಸ್ ಅಲ್ಲಿ. ಸೇಮ್ ಕ್ವಶನ್, ಸೇಮ್ ಪ್ರಾಬ್ಲಮ್. ಯು ರಿಮೆಂಬರ್ ದ ಅಸೆಟ್, ದಿಸ್ ವಾಟ್ ಯು ಎಂಟ್ರೀಸ್, ಕನ್ಸ್ಟ್ರಕ್ಷನ್, ಫಿನಾನ್ಷಿಯಲ್ ಅಸೆಟ್ ಅಕೌಂಟ್, ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ರೆವಿನ್ಯೂ. ಈ ಪ್ರಾಬ್ಲಮ್ ಕ್ಯಾಪ್ಸ್ ಮೆಟೀರಿಯಲ್ ಇಂದ ಲಿಫ್ಟೆಡ್. May 23 whether they ask or not I don't know, but repetitive question. Then voucher, discount voucher ಬಗ್ಗೆ ನಿಮ್ಮ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಒಂದು ಪ್ರಾಬ್ಲಮ್ ಮಾಡಿಸಿದ್ದೆ. ಓಕೆ, ಸೊ ಹೌ ಡು ಯು ಅಕೌಂಟ್ ಫಾರ್ ದ ಸೇಲ್, ರೆವಿನ್ಯೂ ರೆಕಗ್ನಿಷನ್ ಪ್ರಾಬ್ಲಮ್. Then impairment of an asset. Question on how do you CGU impairment. Okay, again extremely important impairment. Prati exam alli almost is a compulsory question. Reversal of impairment, CGU calculation. Then income tax. Okay, so India's 12. So temporary difference idu calculation ing ಮಾಡೋದು extremely important. Some theory question. ಇದು ಯಾವುದು 6 capitals of integrated reporting, FS and HSR ಹೇಳಿದಲ್ಲ ನಾನು. So those capital ಬಗ್ಗೆ same story bad ಮಾಡ್ಬೇಕು, short form ಮಾಡ್ಬಿಟ್ಟು. Question number 4 is about India's 109 fair value computation, embedded derivatives ಎಲ್ಲ ಇರುತ್ತೆ investment valuation ಗೆ. 109 ತುಂಬಾ questions ಇರುತ್ತೆ, take extra care this entire question. Then ROE asset and lease liability, present value. ಇದು a ditto question, a similar question we would have done. If there is a modification of the lease, ಹಿಂಗ್ ಮಾಡ್ಬೇಕು, ಅದ್ರ ಬಗ್ಗೆನೂ ಕ್ವಶನ್ ಕೇಳ್ತವೆ. A common question asked repeatedly. Next question is about agriculture. Okay, agriculture ಬಗ್ಗೆ ಸಕ್ಕತ್ತಾಗಿದೆ ಕ್ವಶನ್. ಎಲ್ಲರೂ ಸಾಲ್ವ್ ಮಾಡಿ. ನೈಸ್ ಒನ್. ದಿಸ್ ಕ್ವಶನ್ ಐ ವುಡ್ ಸಜೆಸ್ಟ್ ಯು ಡೂ ಇಟ್. ಲೈಫ್ ಸ್ಟಾಕ್ ಲೆಜರ್ ಅಕೌಂಟ್ ಬೇರೆ ಮಾಡೋಣ. ಓಪನಿಂಗ್ ಸ್ಟಾಕ್, ದೆನ್ ಕ್ಲೋಸಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್, ಎನಿ ಚೇಂಜ್. ಓಕೆ, ಫಿಸಿಕಲ್ ಚೇಂಜ್ ಅಂಡ್ ಪ್ರೈಸ್ ಚೇಂಜ್. ಇದರ ಬಗ್ಗೆ ಒಂದು ಎನಾಲಿಟಿಕಲ್ ಥಿಯರಿ ಕ್ವಶನ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿರ್ತೀನಿ. ಲೆಜರ್ ಅಕೌಂಟ್ ಐ ನಾಟ್ ಡನ್. ಇದು ಲೆಜರ್ ಅಕೌಂಟ್ ನೋಡ್ಕೊಳ್ಳಿ. ಓಕೆ, ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್. ದೆನ್ EPS calculation with the diluted EPS. I was just telling you at the beginning of the theory. Then share based payment, a compulsory question. Share based payment ಅಲ್ಲಿ India's 41 analytical theory. Then we have India's 109. Okay, financial instrument problem. Segment reporting ನೋಡಿ ಎಷ್ಟು ಜುಜುಬಿ ಕ್ವಶನ್ ಅಂತ. ಟೋಟಲ್ ಮಾಡ್ಬೇಕು. ಇದು ಟೋಟಲ್ ರೆಲೆವೆಂಟ್ ಅಲ್ಲ, ಇದು ಪ್ಲಸ್ ಮೈನಸ್ ಎಲ್ಲ ಟೋಟಲ್ ಮಾಡ್ಬಿಟ್ಟು ಪರ್ಸೆಂಟೇಜ್ ಮಾಡ್ಬೇಕು. ವಿಚ್ ಎವರ್ ಇಸ್ 10% and above, ಇಟ್ ಇಸ್ ಗೋಯಿಂಗ್ ಟು ಬಿ ರಿಪೋರ್ಟೇಬಲ್ ಸೆಗ್ಮೆಂಟ್. ಅಷ್ಟೇ. ನಮ್ಮ ಕ್ಲಾಸ್ ಎಲ್ಲ ಮಾಡಿಸಿದ್ವಿ ಪ್ರಾಬ್ಲಮ್ ಅನ್ನ. ಕೇಳಿಸ್ತಾ ಇದ್ದೀರಾ? ಯಾ. ದೆನ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಅಕೌಂಟ್, ಇಕ್ವಿಟಿ ಮೆಥಡ್, ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಕ್ಯಾಪಿಟಲ್, ಕಾಸ್ಟ್ ಆಫ್ ಇಕ್ವಿಟಿ ಪ್ಲಸ್ ಎನಿ ಪ್ರಾಫಿಟ್, ಎನಿ fair value change, any profit changes, this has to be taken care. Time is to.
9 ಗಂಟೆ sir.
Thank you very much. So this is just for information, for confirmation. So by God's grace, this time we got a terrific result from our CA Foundation. Foundation ಜೊತೆಗೆ ಸ್ವಲ್ಪ PUC ಸ್ವಲ್ಪ ಟಚ್ ಕೊಟ್ವಿ, except first rank, second rank to 8th rank, 7 consecutive ranks. Okay, 50 students are there. Out of 50, 7 rank, and almost everybody else is the distinction. This is a terrific result. And any of you are listening for the first time, we have got the best of the best education. Okay, foundation 15,100 to ensure that the middle class and low middle class people actually get the best of the best education. And intermediate 34,100. Foundation is next batch starting in July first week. Intermediate August first week. CA final next batch. The first group is starting on 22nd May 2023. So FR I will be handling, not like this. What I would have handled in 3 months, I did it in 1 hour. Then SFM by Tarun Jagadish sir. So we are changing slightly timings also, so that everybody can comfortably attend the class. Morning class will be only between 7 to 9. There are no classes after 9 o'clock. 3 subjects will happen in the morning. Saturday evening will be there, and Sunday half day. And SFM class will be only in the evening, 8:30 to 11. Okay, so that and it is not a busy season. So May 21st itself we are starting that SFM also. 22nd we are starting FR classes, and law will be done by the rank holder throughout SMSR, and auditing from this time. Teacher, Asha Madam's teacher, Vikas Ostwal is back. Okay, so he'll be handling auditing in our institution. Okay, from this batch. Okay, extremely great faculty. He started his teaching career in CAPS only. In between, obviously, went to so many the levels of teaching career. So he'll be back. We are very happy to welcome him back. One of the best team is available with the most affordable fees of 44,100. CA Foundationally, this time we are doing Kalam project in Mysore. So that's why Mysore district students, anybody who is from Mysore, the fees will be 10,100. And any college which is having a tie-up, etc., they have 10% off for the education. So it's CA Foundation fees. So I hope all of you got the benefit out of it. Okay, so all CA final sessions will happen in Zoom only. I would request all of you to attend the Zoom sessions only. Okay, so that you get the benefit. Yes, as long as you understand 90% of what we do, okay, it is enough. 100% will not be able to do it. So every faculty will be coming and doing the best. So next, those who are new, those who are not attended the conference booster session, which we took at 7:15. For you, I'll just show you the schedule, which I'm sure all of you are aware, but nevertheless, for the benefit of those who have missed it. Okay, so every exam day evening we'll be having 8 to 9 session. So for example, today we did FR. FR exam is on 2nd May. 2nd May evening, Tarun Jagadish sir will be doing SFM. So then once SFM exam gets over on 4th May, then Asha Madam will be doing auditing. Then 7th May, there is 1 day extra gap here. Please note, corporate law. Auditing and corporate law, the theory paper where we normally will get little lesser mark. You focus little extra and try to get an extra mark. FR and SFM, one of this paper you must get 80 plus. This is a simple way of passing CA first group. FR, SFM, one of them will be easy. Both may not be easy. So you should get 80 plus. First group is done. Second group only, maybe SCMP is easy. It may be what you call the optional subject. I would suggest you to go with the ECL or whichever optional subject you selected. There, if you get 80 plus, second group is done. That's it. That is a simple way of passing CA. So do not indulge in trying to get 100 out of 100 every day. It's not possible. And one more simple suggestion to your friends, may not be for you. Those who are planning to take up their examination, CA Institute has rejected the plea of the CA Institute. Central government has rejected the plea of 2 years of articleship, new scheme, etc. CA Institute is planning to repropose the same. That's why if some people are waiting for the new scheme and then join the classes, let them not wait, because the old scheme is going to be continued for some more attempts. That's what the CA Institute has told, and we'll be starting, and we'll be doing all the 4 subjects together. Best way of education, best of the best team. Subject wise, pen drive classes may not be impacted, but you please suggest the students to take up the group wise classes so that everybody passes with the high marks. I hope all of you got the benefit. Reasonably understood? Entire syllabus up on the
Yes, sir. Yes, sir. Yes.
Now, very important, Kondaya, how you present your answer matters. It is not just your knowledge. How you present your answer matters. So go and present your answer in the best possible. Okay?
Yes, sir. Yes, sir.
So all the best to all of you. Some of you I may be knowing, some of you I may not be knowing. Doesn't matter. We are all Indians. Okay, so do your best, give your best, and all of you, I pray God that pass in this May 23 attempt, and you become a third accord at the earliest. Bye, see you, enjoy. God bless.